Stocks gain on expectations of continuity in policy, and we have decent gains despite coalition compulsions. PSUs lead the charge besides utilities and realty as well as capital goods. FMCG, the weak link.
BHEL bags 2 orders aggregating to over 7,000 crores. RVNL also clocks a new order win, and NBCC snaps up orders of just under 500 crores. The wins and ND's expected return fuel optimism on capex.
Titan has started selling sunglasses via quick commerce and is all set to sell prescription eyewear online as well. The management tells CNBC-TV18 it's confident of turning EBIT positive in all emerging businesses by end FY27.
Murugappa Group's Vilayan Subaya tells CNBC-TV18 he is confident of CG Power's bet on e-mobility and plans to launch a 3-wheeler, a truck and a tractor. He's also building a chip assembly and testing unit in Gujarat and plans a foray into appliances with CG Power.
Nvidia becomes the second most valuable company after Microsoft and ahead of Apple after its market cap tops $3 trillion. This even as regulators are likely to start antitrust probes into roles of Microsoft, OpenAI and Nvidia in the AI industry.
Hello and welcome to the CNBC-TV18 HDFC Sky election headquarters. I'm Ekta Batra and with me is Manglam Malu. Well, it is the second straight day of gains, so no complaints coming in at this point in time. And if you look at it, we've rallied all the way from the intraday low on Monday, which stood at around 21,281 or thereabout, all the way to levels of around 22,800 today. So just about, we've come off those levels, but it's around a 1,500 plus point recovery that we've seen if you just chart the dots and chart the journey of the Nifty intraday low on Monday up till now. So good going for the markets. Mid-cap index is up around 2%, no complaints coming in, and a strong advanced decline ratio as well, Manglam.
Absolutely, Ekta. You know, you said 1,500 points from the lows on Tuesday that we hit on the Nifty itself. From there, we've seen a big rally. But even if you do not take into account Monday or Tuesday or Wednesday, the first exit poll rally and then the big decline and thereafter some recovery yesterday, even if you adjust for all of that and believe that the markets were shut for the last 3 days and you hung around through all the volatility, you're still up 200 points from Friday's close on the market. So that's telling you that we are doing extremely well. So there you have it. You know, the last 7 days, the Nifty is just down about 0.7%, but from Friday's close, it's actually up about 200 points. And even as we're off the highs of today, like you pointed out as well, you know, important to see where we go in the second half of trade. The mid-cap index is doing extremely well. We have nearly 10 stocks advancing for every stock which is declining in the broader markets. 2,100 stocks on the NSE higher. And we are seeing some return or some sort of buying from lower levels in a lot of these PSU names as well. BHEL, for instance, up 12%. Though, mind you, it's still down 4% for the week. So whether this sustains or is this just a dead cat bounce that we're seeing in all these PSU names is something that we'll focus on.
Yes, absolutely. And my mistake, I meant Tuesday's lows. Obviously, Monday was the day where we had the exit poll reaction, and then Tuesday was a reality check which came through. But nonetheless, like you mentioned, you know, on a week-to-date basis, there are some stocks which have done well. So let's see. It seems as though it'll probably sustain, and topping the list is HUL within the Nifty space, which has already gained around 9% week-to-date, accounting for today's losses as well, and even something like a Hero Moto, which is up around 7.6% on a week-to-date basis. So these are a couple of stocks to keep on your radar. Let's kick off the show by talking about some stocks in news. IEX is surging in trade after posting what was a strong business update for the month of May. Vivek is here with the details on that. Vivek.
Well, that's right. You know, the company yesterday evening went ahead and reported the May monthly operational performance. When you're talking about the monthly total volumes, it came in over 10,633 million units, which was a gain of almost 29% on a year-on-year basis. So very strong volume activity. The core electricity volumes went up by almost 21% on a year-on-year basis. The day-ahead market price came in at 5.3 rupees a unit, which the company says is almost a 20% discount to the kind of pricing that is seen in bilateral contracts between both the power producer as well as the DISCOM. So they believe that it is much better for power producers as well as buyers to come onto the exchange. Now they're saying going ahead, they see increased sell-side liquidity from sale of surplus under-cushioned power on power exchanges. They also expect to see increased fuel supply and also higher availability of generating units is something that is expected to aid the sell-side liquidity going forward.
All right, that's about IEX doing extremely well in today's trading session in line with all the other exchanges, all the other PSUs as well. But Vivek, hang in there because there are a lot of PSUs which are buzzing on the back of news as well. We have BHEL, NBCC, some order wins. So fundamentals, not a problem so far.
Well, you're right. When you're talking about these PSUs, order wins is what keeping them very, very active. BHL, we've been saying it time and again that the order book, especially over the last 2 years, has been increasing quite significantly. Yesterday, again, 2 very significant orders coming in for BHEL. So the first order is from Uttar Pradesh. In the state of Uttar Pradesh, the company will be supplying equipment. Now, this particular equipment is for a 2 into 800 megawatt. That is almost 1600 megawatt of a power plant that is being set up. The company will be supplying boilers, turbines, as well as generators. And the total size of this particular order is over 3,500 crore. Now, the second order is in the state of Chhattisgarh. Again, the scope of work is similar. The company will be supplying equipment as well as the EPC works. Order size, again, over 3,500 crore. When you're talking about the total order size that the company has received, from these 2 orders, over 7,000 crore. And the order book of the company right now stands well over 1.3 lakh crore. However, what needs to be tracked is the kind of execution that BHEL would be able to manage and the kind of margins that they expect to order. NBCC, like you mentioned, over 490 crores worth of order wins that came in yesterday. Stock surging on the back of that.
Okay, yes, order wins seem to be the key reason for those stocks in focus. But thanks, Vivek, for that. Let's move on then. City gas distributors are buzzing after the brokerage house Citi has published a constructive note on the sector. The regulatory authority, the PNGRB, has also issued a draft notification for gas distributors to establish and operate LNG terminals. Sonal has more details on this. Sonal.
Well, there are a couple of things which are happening with these gas names. Let me start with the Citi note first up, where they remain constructive on GAIL, IGL and MGL as well, and these are the preferred picks. They believe consolidation in CGD sector is likely going forward, and consolidation could benefit the larger, more experienced CGDs according to them. The second thing that they talk about is something that the other analysts have spoken about as well, is a possibility of gas coming under GST in the new NDA regime, and if that happens, that would benefit the entire value chain, allowing input tax credits and reducing costs for these companies as well. The second is 2 PNGRB notifications. The first one is allowing these companies to establish and operate LNG terminals. The LNG infrastructure would include receiving, storing, transporting LNG via their own terminals, because a lot of these companies have spoken about expanding from their current portfolio. The LNG terminal companies, they shall submit application for registration, and they should also furnish bank guarantees to the tune of around 1% of the estimated project cost, or 25 crore rupees, whichever is less. Board, after examining the application, may issue certificate to commence operations for around 30 years. Again, this is just a draft. The third piece of news is that PNGRB has issued another notification where they actually revoked the previous notification dated 13 September 2021, which would allow more marketing freedom to all these city gas distribution companies. They say that now the exclusivity factors would consider a lot of things, not just the number of years. It would consider the location, gas availability, population and aggregate demand as well. ICICI Securities says that this is positive for their coverage companies like MGL and Gujarat Gas and IGL as well, because there was a fear of more competition coming in, with marketing exclusivity ending for a lot of these other companies. They see this notification to give some relief to existing CGD players that enjoy marketing exclusivity and something which is not ending in the near period.
All right, Sonal, thanks a lot for that. So those are the city gas distribution companies in focus on the back of a couple of brokerage notes and a lot of news factors, backing that itself. What we'll do is take a short break from the CNBC-TV18 election headquarters. On the other side, we'll have Aditya Agarwala, who's the head research and investments at Invest for Edu, joining in with some trading strategies. Welcome back. You're watching us here on Halftime Report. The Nifty holding with gains of about 130 points, fairly off the highs of closer to 22,900 mark, though it is still sitting on a good near 1,400 point rally from the lows that we saw on Tuesday itself. Important because it's the 6th of this month, which also means it's a Thursday, and it is the weekly options expiry, the first one of this series, and more importantly, the first one which also had the election results and a lot of other events backing it as well. So the Nifty weekly options expiry, it's holding with gains of around 22,750. And if you just take a look at the way the option writers are positioned, on the way up, today's high of 22,900 is an important resistance. Why do I say that? Because there is a fair amount of writing on the 23,000 call, a psychological barrier that we have for the market right now, and the 22,900 call as well, equally active. So levels upwards of 22,930 to around 23,000 on the way up may face some resistance. Where does the support come in? Nifty is holding above that 22,700 mark. The 22,700 put has seen a fair amount of writing for a premium of 80 rupees. So closer to 22,600, 22,620 would be an important support, the first support. And below that, we have the 22,500 mark, which is also equally active as an option. So the broad range that you're looking at is 22,500 to 22,900 on the way up. And the 22,500 also has important technical levels as well as support. So you have the 20-day moving average at 22,513 and the 50-day moving average at 22,437, a level that was conquered in yesterday's recovery from the lows that we saw. What's interesting is that even as all the PSUs are rallying today, there's no fresh long positions which are being added. Instead, there are just a lot of shorts which are being covered. So you have BHEL, which is up 12%, Container Corp, which is up 5.5%, Bank of Baroda up around 4% as well. So to that extent, will be important to see at what level does the short covering stop and we see fresh longs being added. And speaking about fresh longs, there are a lot of stocks which are actually doing well and seeing some fresh long additions as well. Aditya Birla Fashion and Retail, for instance, has conquered the 300 rupee mark, now at around 314 at a multi-month high for that stock, has been doing well ever since the last couple of months or so, ever since they announced the demerger of their businesses. Metropolis Health, definitely something's brewing out there with the kind of open interest jump that we've seen and a 3% up move on that stock. And IEX is the other one, which Vivek earlier told us, strong monthly update coming in out there. But that's the one which is seeing from some fresh long positions as well. So far we look like, today's high on the index may have been made. Let's see where it goes from here. Do we see some sell-off in the second half of trade or not? And more importantly, in the PSUs itself, there has been a bounce, but that's a short covering bounce. So let's see whether there's some formidable buying that comes by out there as well, Ekta.
Okay, all right. So that's on the F&O setup. Just want to point out that there's some news on Orchid Pharma, and maybe the stock should come up for you. They've received DCGI approval for an API for basically a drug which is going to combat severe infections. And they're going to be launching this particular drug in the Indian market. It is indicated to treat very difficult to treat UTIs, hospital-acquired pneumonia, bacteria. So it will probably be important in terms of a drug launch for them. It'll be interesting to know the market size as well, considering that, antimicrobial resistance, Manglam, is becoming a big issue where people are getting resistant to a lot of drugs. Yes. And hence new antibiotics are needed in order to combat severe infections. But we do have Aditya Agarwal, who's Head of Research and Investments at Invest4Edu, joining in on the show. Aditya, welcome to the show. What would your approach be towards the markets, considering it's gaining for the second straight day?
Good afternoon, Ekta. Good afternoon, Manglam. Thanks for the show. It's a bounce back, Ekta, we can say. Markets become very choppy and volatile and on expected lines because we had seen that move from Monday till today. It's all over the place. I guess from now onwards, markets will enter into a consolidation phase. We've seen the kind of sharp bounce back also from the lows of Tuesday. I think it's more of a stock specific and a sector specific market now, and on the upside 23,000 will act as a major resistance for the Nifty. And on the downside, I think markets will consolidate closer to about 22,500, 22,400. So the juice that you had in the Nifty and the Bank Nifty, I think that's over now. You'll have to be very selective and skeptical about where you're going long, because you might get caught on the wrong side and you can see some kind of a profit booking as well. So overall, I think for the day, Nifty might not scale past 23,000, as Manglam also pointed out. There a huge open interest build up on the call side. On the downside, I think markets will find support closer to about 22,700. So between 22,700, 22,900 is where I think markets might just expire between this range. On the bank Nifty, clearly 50,000 is acting as a major resistance. And I think till the time that is taken out, I don't see fresh aggressive longs build up in the bank Nifty as well. So overall, it's a stock specific market. One can stick to stock specifics and sector specifics in this market.
All right, so let's talk about stocks and sectors itself. Apart from the stocks that you've lined up for us today, just before we let you go, Aditya, also wanted your thoughts on the FMCG pack. The last 2 days have been extremely good. Today, seeing some profit taking. Do you think this is a dip worth buying?
Not today, Mankalam, but yes, I definitely believe there's more room on the upside as far as FMCG is concerned, especially your large cap FMCG stocks. If I talk of be it a Britannia or an HUL or maybe ITC hasn't performed yet, but I think it's time ITC will also chip in. So yes, today is a profit taking day and a good time if you want to add partially, and maybe tomorrow or next week you can look to buy again in FMCG space, because I still see there's at least 10 to 15% room on the upside in most of the FMCG names, and you name it, be it a Britannia, HUL, Marico, ITC, I think all of them will continue to outperform from here on. And if I can add, I think IT is something which has been ignored big time. One should definitely start looking at IT sector, and from the mid cap IT space, I think so you will see a good buying coming into the markets.
All right.
Okay. All right, Aditya. We're going to take a short break on that note. Thanks very much for joining in. I just want to get back to Orchid Pharma. Just an incremental piece of news which I just wanted to add is this particular drug that they've received approval for, Emetazobactam, is the same drug that they had out-licensed to a partner in the US many years ago, and which finally got the US FDA nod as well to be treated for severe infections. So I think that would be important, because they were looking for an India launch. Orchid Pharma has the India rights to it. As you can see, the stock is spiked up, and its market is expected to be worth around 200 crores in the Indian market. So let's see if we can get in touch with the management. Overall, this should be an important development for Orchid Pharma from the Indian context.
What's the name of the drug again?
Emetazobactam.
Emetazobactam. All right, we'll practice that name. But in the meanwhile, what you do is take a short break, come back on the other side. We'll bring you excerpts from our exclusive conversation with the management of Titan, especially on their jewelry vertical.
Welcome back. Well, for the markets, it's holding up very steadily. No problems coming in. We have a very good advance decline ratio, like we've been pointing out. So on the National Stock Exchange, it currently stands at around 7:1. 2,000 stocks advancing to around 288 stocks which are declining. So you can see the gap, which is extremely wide when it comes to the advance decline ratio. Always heartening to see after the kind of drubbing that we saw on Tuesday's trading session. In terms of specific stocks, just to point out, in terms of gainers this morning, we have the likes of State Bank of India, which is really topping the list. So good comeback for a couple of these PSUs banking stocks. We have SBI, which is up around 4% and a couple of others separately from, the outside that space is NTPC, which is rallying up around 3% A couple of these IT stocks are not doing too badly. HCL Tech has picked up around 4% this week and is up around 2.8% today as well. But we do have the management of Orchid Pharma to talk about the development that just took place. We have Manish Dhanuka, who's the MD of the company, joining in now. Mr. Dhanuka, thanks very much for joining in. Just give us a sense that this is the same drug, Emetazobactam, which was given US FDA nod in Feb of this year through your partner.
That is correct. That's correct. So this is an beta-lactamase inhibitor which goes with the antibiotics, and we are happy to announce that we have got the approval for this new inventive molecule which was invented by Orchid few years back, and a combination drug involving enmetazobactam along with an antibiotic called cefepime. So we feel very happy that with this particular drug, we would be able to introduce a cost-effective and advanced injectable antibiotic therapy to India.
Right. So from a business standpoint, if you could give us a sense of how big the market for this product here in India is, and what's the kind of incremental revenue that you expect to get once you launch in India? By when does that happen?
So we have got the approval from the DCGI, and we are now going to the state licensing authorities for giving us the manufacturing licenses. And after that, we will go in for the manufacturing of the product. I expect this to take about 2 months' time, and we hope to launch it in the month of August. The drug has been approved for 3 indications, basically. One is the community-acquired pneumonia and the urinary tract infections and pyelonephritis and bacteremia. So these are the widest range of infections that occur in the hospital setting in India. I think this covers a very large population of infected patients. However, we would like to use the molecule judiciously in the light of impending antimicrobial resistance that's growing. And we would like to advise the doctors to use the medicine in patients which are resistant to other currently prevailing antibiotics.
Okay, so you're not saying that this should be a first line of treatment?
So the doctors will have to take that call, but we would like to promote it in a very judicious and ethical manner.
Right. The brokerages are estimating, sales of nearly 200 crores from a product like this. This is a note that is coming from Systematics. So would you confirm or deny this figure as fair?
So like I said, the patient population is large. However, it takes time to promote a new drug like this. It takes time. We do expect the sales to reach this kind of number, but how long it takes is difficult to predict at this point of time.
Okay. Can you tell us what the results have been in any kind of clinical trials that you've conducted for this particular drug in India?
So we have been asked by DCGI to carry out the phase 4 clinical trials, and based on the worldwide clinical trials that were done by our partners, they have given us this approval. So the trials were done on the urinary tract infections, and it was compared against a drug called piperacillin tazobactam. The drug was found to be 20% more effective against this particular prevailing drug.
It's 20% more effective than the current drug which is used for UTIs.
That is right. That is right.
Okay, but we haven't done independent trials in India to show the efficacy of the drug on the Indian population. You're going by what your partner has done in terms of the global trials, correct?
Yes, the DCGI has accepted that the trials, worldwide trials, were varied enough to accept the results of those trials. And based on that, we shall be carrying out the phase 4 trials while the product is being sold.
What is your sense in terms of the competition that you have currently within this space? I'm not talking about first line of treatment. I'm talking about, say, second line, last line of treatment, which would be along with your particular drug in the market to, say, treat a severe pneumonia or, say, treat a severe UTI.
So you see, the major advantage of the drug is that it is carbapenem sparing. So as per the guidelines of the ICMR, the carbapenems have to be used very judiciously, and they should not be used as a first line of treatment. However, unfortunately, when doctor finds a patient which is in serious need, they do tend to inject carbapenems. So this therapy can cure the infections which are resistant to the first line of antibiotics, and the resistance has developed over the last few years. And if this drug is used as against the carbapenems, it will save carbapenems for the future generations. That's the major advantage we think this drug presents.
Fair point there. Thank you for explaining this drug's potential to us. But since we have you with us, I can't let you go about without asking you about the entire company itself. You had earlier indicated to us that 15 to 20% revenue CAGR over the next 3 to 4 years is something that you're poised for. So if you could refresh that guidance for us. And I remember particularly well that you said that you are looking to increase your capacity utilization. Where does that stand at right now? Where do you end this year with, and what does that do to your margins?
Yeah, so we finished the financial year 24 with the sales of 19 crores, as against 666 crore we did in FY23. So this works out to a 22% CAGR. And we achieved an EBITDA of 142 crores against 103 crores for the last year. So this is about 30% of EBITDA CAGR. So I think last 3 years we have been on course in the range of these numbers, and we hope to continue doing this. There is a capacity expansion that was completed last year, which has gone on production this year, and there is another round of expansion going on, which we hope to complete during the second quarter. And hopefully, keeping our fingers crossed, we wish to achieve the same kind of growth this year.
Okay. Just a quick question coming back to this drug. Which other markets are you able to probably get approval and sell the drug in?
So the licensee has got the approvals in Europe and the US. The approval process is going on in China, but Orchid per se has the rights only in India.
Okay, so your rights are limited to India. Just a quick last question. Q4, your margins came down significantly. Why is that, and what are you guiding for?
So you see, because we are a B2B supplier, and the average size of the consignment is large, we do not wish to look at the percentages from quarter to quarter. It depends which markets were supplied in which quarter and what consignment. So like we operate in the regulated and the non-regulated, both the spaces. So depending on which markets got supplied during that quarter, the percentage of EBITDA varies from quarter to quarter.
And by when do you reach this 200 crore run rate for this drug? You said that at some point you will, but just wanted to understand, is it FY26, FY27? By when does that happen?
Yeah, we expect to do it, say, after about 2 years of launch, 2.5 years of launch.
Okay, all right. We're going to leave it on that note. A pleasure speaking with you, and on such short notice as well. Thanks very much for joining in and talking to CNBC-TV18. That's Orchid Pharma. Stock is up around 2.8% at this point in time. We'll take a short break. On the other side, we'll focus on the FMCG space, which has really been the talk in the past 2 trading sessions odd. We have Naveen Trivedi of Motilal Oswal Financial Services who will be with us. Stay tuned. Welcome back. Well, the Titan management tells CNBC-TV18 that it is confident of turning EBIT positive in all emerging businesses by the end of FY27. My co-anchor Mangalam did catch up with the company's MD and CEO of the watches, wearables and eye care business to discuss their growth outlook. Listen in to an excerpt of that exclusive conversation.
I think competitive intensity in jewelry has always been high because it's an unorganized market and large number of players. It's also a huge category, right? It's about 500 to 550,000 crores. And obviously it's going to attract more and more players. But for us, we are still, high single digit growth market share. We are only at about 8% market share. So the headroom is huge, both in terms of share gain, as well as if I look at the dispersion of segments, be it markets, as well as maybe different segments, be it high value studded, be it wedding, regional markets. So the opportunity for us is huge, including the small town opportunity. Middle India is a huge base in India. There are 500 towns in the 1 lakh to 1 million population strata. And we are present in only about 180 of those. While we don't know if all 500 towns will ever get ready, but the headroom again offers a very large opportunity for us. So all in all, I would say the share gain opportunity is so huge that even if 5, 6 more big players or competitors come in, there's opportunity for everyone.
So to that extent, say over the next couple of years, what would your store rollout plan be, and what's your aspiration here?
Over the next 3 years, we see, easily we can add about 100 plus stores in Tanishq. We can add about 150 to 200 stores in Mia. and certainly 100 plus to 150 stores in Carrot Lane. Zoya also there's an opportunity, but there we are not looking at large number of stores. So in totality, the opportunity to add 300-400 stores is very comfortable.
One of the concerns that the analysts had, was the ability for the company to grow its margins from current levels. In fact, 12 to 13% was the guidance, saying that over the next couple of years, it may be at the lower end of that space itself. So should one believe that these issues right now are structural, or are there levers to improve them further from here?
I think at an overall domestic jewelry business, we shared that EBIT margins would be anchored around the 12% mark. And while there will be ups and downs quarter to quarter, but on an annualized basis, that's where we hope to. I don't know about growing the margins. Yes, with a certain operating leverage, it can grow. But in the medium term, we expect it to be around the 12%.
Ajoy, I have to ask you this. Tanishq, strong brand, mother brand when it comes to the jewelry business. But a lot of people are now looking at jewelry as adornment, so which is why you all, spawned other brands and scaling that up as well. If I had to look at one of your group companies, Trent, they, got a big upsurge in the value category with Zudio. So is there a potential for Zudioization of jewelry in the Titan business?
Good question. Perhaps there can be. But the difference, I guess, between the two categories is that there is a certain price sensitivity when it comes to buying garments and maybe other categories. In jewelry, there is a mix of both adornment and investment value. It's not one or the other. In terms of sheer number of buyers, we do see good opportunities even within Tanishq as well as Carrot Lane and Mia, adding to large number of buyers. So from a buyer base, yes, but because the value of gold and diamonds is so high, and gold is also going up, the total value turnover may not follow the same trajectory like that might happen in garments. But you're right that in the sub 100,000 space, large number of buyers can come into our category, and we should look at that opportunity.
Since there are a lot of players, do you think it makes sense for now Titan to make a move there, maybe acquire some people out there, or maybe, just organically start and grow in that part of the business?
I think the competitive intensity is not as strong there. There are some new players which have come in. The competitive intensity in the mainstream business is much larger. In the sub 100,000 studded space, I think it's a matter of growing the category. And as more and more players come in there, many more millions of customers can come there. And we have 3 brands which play strongly amongst maybe a cluster of 8 or 9 brands which might be existing there. So I think right now we don't need to add more brands there as much as allowing organic growth to happen. And we are doing that through adding significant number of stores and collections.
Are you comfortable with the growth rate at which Carrot Lane is as of FY24? Because if I look at it, FY21 was a sub 700 crore business, thereafter turned into 1200 crores that grew to 2200 crores. So the CAGR between FY21 and FY23 has been a lot more than what it was in FY24. So I just wanted to understand the sustainable growth rate for a company like Carrot Lane.
So FY24, Carrot Lane grew at 34%.
Yes.
And while the CAGR over the last 5 years is around 47%. So yes, comparatively, but the base has also gone up. Now, last year, there was a certain significant pressure that I think started coming in maybe post Diwali. And therefore, certain growth rates in many discretionary categories came under pressure. And in the studded space, I think the customer segment that was operating, especially in this sub 100,000, has come under some amount of economic sentiment related issues. But I think what is an appropriate CAGR? On a small base, you can show a CAGR of 40-50%. But at the base at which Carrot Lane is, I think 30 to 35% CAGR is good. I don't think the market is growing at that rate. So it's a good opportunity.
All right, 30 to 35% CAGR for the Carrot Lane business, along with 12% margins for the entire jewelry business, growing at around 15 to 20% compounding over the next 3 years. That's the course of action for Titan going from here, speaking about a huge headroom for market share gains as well at 60 times plus valuation. How much juice is left in the stock? We'll leave that to our next guest because it's the FMCG space which has been in focus over the last two trading sessions. A big move is what we've seen in a lot of these staples names, be it HUL, Dabur, Britannia, or even the smaller names like Imami and Jyoti Labs. Naveen Trivedi, who's the Senior VP Research Analyst, Consumer and FMCG Institutional Equities at Motilal Oswal, joins in now with his call on the sector. Naveen, first we congratulate you for the call on the sector. In fact, you were the one among the first few ones to turn bullish on the sector way back in April itself on the back of strong management commentary and risk reward on the space. And now it's been peppered with, the recent up move that we've seen in the stocks, with the street looking at this space as a possible portfolio reallocation as well. What's interesting in your note is that despite this up move, you believe that there is case for re-rating beyond what you've earlier estimated. You say that you estimated high single-digit volume growth for FY25 and FY26 with an upside risk to that. So could you explain that to us? Where does that optimism come from?
Yeah, sure. Thank you so much, Mangalam. If you look at the even the last quarter commentary also, where some of the management had highlighted about the recovery in the quarter four in the rural side has seen a meaningful pickup. And if you look at the amount of drives which the companies are working around the distribution side, new launches side, the once you start seeing the overall recovery, all other initiatives will also adds up in terms of the volume growth, which we so far we are building up around a high single digit sort of a growth rate for most of the names. Our take here is that we so far has not added the advantages of. If you see the rural side, the monsoon is also in their favor. If the crude side also basket has seen in their favor. So there is still a room where they can still pass on more benefits to the consumer. Which if you look at last 2 year context, where the lower strata level where the consumption was under pressure. Once you see that the pricing side, some benefits if you pass on to the rural side where the consumption was muted for last 2 years, there can be further levers in terms of the more volume pickup in the coming years, and thereby even in our note we highlighted about that. So far we are not building up a double-digit volume growth case, but yeah, high single-digit volume growth sort of number is expected on our cards.
Okay. All right. Naveen, how would one justify the valuation of around 49 times 1 year forward when it comes to HUL?
Sure. If you look at the last 5 year average P multiple for lever is close to 60 times. And then we have seen last 2 years of underperformance of the entire sector, including lever. If you look at the volume side recovery, if they sustain this sort of a meaningful reversion in the volume growth side, the confidence level will also goes up to the valuation side. So far, we are seeing that some amount of sequential improvement has happened in some of the cases in the quarter four. If this sustainability trend sustained for another couple of more quarters, the valuation gap which was there for around 15 to 20% for most of the names, which even Mangalam highlighted about Dabur, lever, where we have seen there was a meaningful multiple correction has happened. Once you see the earnings side improvement, the gap will further narrow down, which we have seen last 2 trading days also. It is covered up to a bit, but if they sustain the volume growth trajectory, I would expect that the gap will further narrow down.
Right. When you had written the note, it was April. From then to now, the stocks have seen a rally of anywhere between 5 to 15%. The last 2 days in particular itself, even if you account for the profit booking that we're seeing today, the stocks are up around 8 to 10% as well. How much more upside do you see over the next few months, the 1 year that we foresee from here?
Mangalam, I would say it will be again a very specific counter to counter depending on how these companies can drive the volume growth, and on top of that, what it looks like more sustainable volume growth sort of a trajectory. There may be a case where some basket will see a more channel filling, some basket will see more seasonality in their favor, but the company who can really demonstrate more around sustainability for the next 2 years sort of a time frame, 2 or 3 years sort of a time frame, I would expect that those counters will sustain the rich valuation, and then there is also a possibility of earning upgrade on that sort of a company. So I would expect that leave about a monthly up and down, but looking at the slightly F25 and 26 sort of a time frame, I would still expect that there is a decent upside in across staples. So our topics are in the staples are Lever, Dabur, and Godrej consumers. Although like we are generally bullish on the staples and we remain overweight on the staple side.
Okay. What is the risk according to you, probably in terms of your earnings estimate now?
As of now, until if you look at the again the monsoon side, if there is any slippages or maybe the RM basket, if there is any reversal sort of a thing, as of now it doesn't look like. But if there is any slippages there which can impact the rural consumption, that is a risk you have to look at in the numbers.
All right. And, usually what IT analysts do is separate the IT companies into two buckets. You have the large cap IT names and then you have the mid cap IT names. Mid caps, of course, have a lot more delta. In FMCG, do you think there is case for that now? Because your top picks you've stated as HUL, Dabur and GCPL, can put them in the large cap bucket. But then you have the second rung of names which are doing extremely well as well. And they trade at a significant discount to these large caps. You have the likes of Emami, Jyoti Lab, you have Bajaj Consumer, you have that entire basket. So is there anything in particular that you like from that basket?
So Emami also we have buy rating on, and I would expect that the seasonal tailwinds also will favor to both the portfolio, summer portfolio and the winter portfolio. So F25 will be the year where they can deliver the volumes growth side of outperformance. And on top of that, this is one counter where the valuations were always on the lower side. Because the top of the brands were always looking like a user addition as a problem. They've acquired some businesses in the last 1 to 2 years sort of a time frame, and on top of that, if the core portfolio start doing well, I would expect that there is also a possibility of a multiple revision in the Emami where the multiple were used to be less than 30 times. So that can be a case for Emami if they sustain the beyond seasonality sort of a play also.
All right, so there is case for multiple re-rating on Emami as well. Final question, since we started out by listening to what the Titan management had to say to us, and you were at the Titan Analyst Day as well, what do you make of that space right now? And would you prefer Titan over Kalyan and Senco, or is it the lower level stocks, that the lower players that you would prefer over Titan right now given the valuation discount?
Sure. Mangalam, in the jewelry space, we only cover Titan so far, so I will only restrict my comment around Titan. Jewelry we like within discretionary, where we are still seeing the growth is not a concern area. The concern area was on the margin side, which also Titan had highlighted in their analyst meet, and they're highlighting around 12% EBIT margin for the jewelry business. I would expect that even if they can maintain this sort of a margin, and if they can sustain a growth drive, which they have last 3-4 years, 5 years, they could demonstrate on the jewelry side. We remain on the bullish side on the Titan also. So growth side, the concerns are not as high versus the margin side, which also I would expect that 12% level has a lower risk if they get of slippages side.
Okay, all right, Naveen, we're going to let you go on that note, but extremely comprehensive discussion there on the entire FMCG space, which has really been the toast of the market, but coming off today, so rightly so, some amount of profits probably being taken off the table. So HUL, for example, is down around 2% at this point, is your top loser on the Nifty. We'll take a short break, get you more on the markets, a lot of stocks in focus. Stay tuned.
Let's focus on some stocks which are reacting to news. Century Textiles up in double digits today. Sonal tells us what's happening out here. Sonal.
Well, Century Textiles wholly owned subsidiary, that is Birla Estates, has entered into a joint venture which is with Barmalt India Private Limited. They will be developing around 13.27 acre of land parcel for a luxury residential group housing in Gurugram under this particular joint venture. The development potential is approximately 2.4 million square feet, and it will offer them a revenue potential of up to 5,000 crore rupees. And remember, NCR is a region where a lot of new developers are entering. They're not new here, but of course they're expanding their footprint in the NCR NCR region as well. Remember, the stock is up 67% in last 6 months itself, and adding on to some gains, so Street likes the expansion plans that they have in the NCR region.
Okay, all right. So that's on Century Textiles. Thanks, Sonal, for that. Hindustan Aeronautics is buzzing today after it inaugurated a facility to support ISRO program. CLSA has also issued a note on the stock. Upasna has all of the details on this. Upasna.
ISRO chairman inaugurates HAL facilities to support LVM-3 programs. Mind you, currently the existing capacity allows only 2 LVM-3 launches per year. This facility will support the production of 6 LVM-3 rockets per year. And mind you, post-election results, CLSA had written a note on defense sector wherein it has retained outperform rating on HAL with a target price of 4,731. It says that the expensive valuations leave little space for execution error. Company has also given a EBITDA margin guidance of 32 to 33% in next 2 years. And for FY25, the company is guiding for a order book of 47,000 crores, excluding the MRO division. As of 31st March 2024, the company's order book stands in excess of 94,000 crores, and company says that it is confident of maintaining FY24 growth momentum on the back of robust order book and strong order pipeline.
All right, Upasna, thanks a lot for that. That's about HAL. All the PSU stocks doing extremely well today after the drubbing that we saw in the last couple of trading sessions. But that's about the equity markets. We take a short break. On the other side, as always, Manisha Gupta joins in with all things commodities. And today she has with her Ajay Goel, who's the chairman, Wheat Products Promotion Society.
Welcome back, and joining us on the show now is Ajay Goel. He's chairman, Wheat Product Promotion Society. Mr. Goel, thank you so much for joining us. When it comes to wheat, there are various stories and various numbers floating around, and the reason to call you today is to get some clarity on all of this. First of all, your sense on the procurement. We are higher than last year in sense of what India procured, but lower than what India had set out a target as. So where do we stand right now, and do you still see these numbers rising?
So last year itself, we were really short of the target, and so are we this year. This year, the target was quite ambitious at 36 million, against which we have procured around 26 odd million. The real problem is that the government expectation of the crop seems to be higher than the ground reality. This year, again, it has been revised upward to beyond 112 million tons by a few points. But the situation on the ground doesn't seem like, we've had such a large crops in the last 2 years. And you can also make out in the year 2022, when government, estimating a much higher crop, actually allowed exports. And then within a month or so, they had to ban exports because on the ground, the crop really didn't seem as large as they were projecting. So I think we are still again into a hand-to-mouth year this year.
Absolutely. Mr. Goel, there was a Reuters story suggesting that India could open exports in this year after that ban that we saw in 2022. Do you see any possibility of that at all? So
imports seem imminent in this year, primarily because the government doesn't have sufficient stocks to, intervene in the markets at the right time. They are also just barely enough for their buffer and the various programs that they're running, and not enough for real market intervention. So I guess somewhere around August, September, if they find that, demand is far exceeding the supply that the market is offering, definitely the government will have to tweak its duty down from 40% to maybe zero. And it seems most likely with a new government in the center, there could be a shift in policy as far as wheat imports are concerned.
Absolutely. So what you're saying is that imports is what we will perhaps most definitely see happen by the month of June, as you said, once we have those numbers all clear in front of us. And exports is something that there is no possibility of in this year.
So there has only been a cry for Indian atta to be exported for the Indian diaspora globally. And that demand continues by the Indian populace living overseas. And there has been a lot of effort put into marketing Indian atta globally and establishing the supply chains and things like that. So the government has opened a small window wherein you can import and then export atta, which is not really the viable solution as the Indians want Indian wheat ka atta globally. So I am hopeful that the government will reconsider the export ban on atta, at least in consumer packs.
Mr. Goyal, also, what's your sense on prices right now? Because, this is a debate that we are having even now as the street awaits the Kharif MSP. The MSP as a subject has been in conversation for some time. When you look at the wheat prices, what's your sense on where we stand and where are we headed as June comes and you see demand coming back even stronger?
So I think market prices are about 3-4% higher than the procurement price plus the cost, and they are moving in tandem with the procurement prices year after year. But the real stress comes in post harvest and post May June when the arrivals in the mandis stop, and then everybody starts looking towards the government if they are going to be releasing stocks in the market. So I would say the market could have been lower considering government MSP by about 3 to 4%. But that's the way the markets are, and currently the market is about 4-5% higher than government procurement prices.
Okay. Mr. Goyal, the other thing really is about the maths. I mean, if we go with the numbers that we have in hand right now, what's your sense with 17-18 million tons going for PDS? What is the sense that you get for our OMS? Because last year was a record number at more than 10 million tons, and then the closing stock itself. So how are you stacking those numbers there?
So I think primarily the government has replaced wheat with rice in a number of states, and at some point it will have to reconsider, especially in the northern heartland where wheat is more preferred over rice. And if the government wants to really rejig that and restore the old supply model, they will definitely fall short for OMSs. And actually, we are just at the edge of everything. We really have to struggle to. We don't have the sense of plenty right now in the marketplace or with the government, which is really the essence of keeping the markets in control.
Oh, well, absolutely that. So there are those concerns continuing in case of wheat. But as you said, that month of May and June is going to be quite important. Once the arrival completely stop and we have a final figure in hand is what we'll know on what the new government perhaps will approach wheat as, which is an essential commodity. And as of now, we have 44% of import duty continuing in case of wheat. Mr. Goyal, as always, thank you so much for joining us. And with that, that's all the time that we have on Halftime Report. Business Lunch will take all the action forward.